Hello, it's Robert Miner with Dynamic Traders Group with this week's brief video for our YouTube followers and subscribers and Twitter followers and subscribers. We take a look at a market that's probably coming into a position for a trade, or at least an interesting trend position each week. And it's a little bit about what we do for our DT Report subscribers in our more comprehensive videos and reports. So I hope you find these valuable, even if you don't trade the market that we talk about. What you learn you can apply to any market and any time frame. Last week I talked about the euro. That trade has not been triggered yet, but as the euro advances this past week, as you know, or if you watch that video, you can always review it, is that we're looking for a probable weekly high in the euro. But as it's advanced this past week, is the pattern reversal signal, or the trigger to specifically enter the trade, moves up along with the market. So it's getting even further near an extreme, and a great setup, I think, on the short side or for a bear trade here in the days ahead. I think it was 2 weeks ago or 3 weeks ago, we featured the S&P. Again, everything in that video applies to today. And of course, we update it 3 times a week in our DT reports. And I just sent out yesterday or Friday a 17-page big picture report on the S&P and the other stock index trends, probably going into the end of the year. So if you're interested in that, you might check out our DT reports. That report, of course, is only for our DT report subscribers. But frankly, I think a 3-month subscription, that report is worth the price of it itself. Because all of the indexes, small caps, big caps, medium caps, NASDAQ, the Russell, all of those are in basically the same position. And in the next 2 weeks, I think things are going to get interesting, as I've outlined in that report. But as always, trading is all about probabilities and actual practical trade strategies. So whenever you identify a particular trade setup, you identify what must the market do to trigger you into the trade, and where exactly do you put your protective stop, because you always got to protect your capital, because sometimes you're wrong. Even I am sometimes. But so far, been doing pretty good in my trading. Let me show you some results from the Robbins World Cup Trading Championship. Once again, a reminder that trading is not about forecasting the future. Amateurs, people that are not successful, don't understand trading, think that that's what trading and investing is about, is forecasting the future. Now, that's not what it's about. It's about identifying specific conditions with probable outcomes and high probability trade setups with acceptable capital exposure. So what you see here is the results, so far at least, on the Robbins Trading World Championship of Derivatives Trading over about the past year. It began last June 1st. As you can see, I'm doing pretty well. I'm not guaranteeing or even implying by any means that every year you're going to make triple-digit returns, but it does show that I actually trade. This is real money, real trading, real results. So again, listen closely to what I have to teach you and prepare you for, because it's what I use to make my trading decisions, and it's very practical and simple oriented. So I hope that's what you're taking away from these videos that I do, and that they help you to improve your trading. Okay, let's get started. We're going to take a look at gold. This is a monthly chart of gold. It begins at the 2015 low. This is what we're primarily interested in, the activity since that low. And based on just some really simple, basic Elliott wave, off of the 2015 low, which that itself was the end of about a 4-year bear market, off of that low, had a distinct advance, and then what we call this a flat correction, ABC correction, trading range correction. And the point was, it was that consolidation period after an advance. And then we have this strong advance from 2018 to 2020, and that's called an impulsive advance to a significant new high. And that's very typical in Elliott wave terms of a wave 3. So we have just a clearly defined 1, 2, and then a 3. And then since the 2020 high, what's been going on? Well, it's almost like back in this area from 2016 to 18, it's a flat ABC correction, more than likely at least. And if that's the case, when this correction is complete, what should eventually follow? Well, a resumption of the bull trend to a new extreme. And so what we want to look at, and before we go on to the weekly and daily charts, this is what's important in this chart, really important, that November 2022 was in a position to have completed this higher time frame 2-year sideways market. That's really important. And because if that's the case, we want to be totally oriented towards identifying opportunities to be long for an eventual continuation of the bull trend, probably significantly above the August 2020 high. Now, before we go on to the monthly chart, is needless to say, if gold were to decline to below the November 2022 low, well, something else completely is going on. Now, that's well over $300 below where the market is now. But you always want to, as a market develops, identify what can the market do to avoid the probable outcome or the probable outlook that you have. Okay, let's go to a weekly chart, and what we're going to be totally oriented to is what's going on since the November low. What should it look like if this is that multi-year low? What should the pattern look like and the activity look like? And what will be a setup to enter on the long side or a bull trade? So this is the June contract. It's the weekly data beginning with the March 2022 high. And then we had that decline into the November low, which we had labeled on the monthly chart as that wave 4. Now, if November completed a higher time frame correction, what would we anticipate to follow that? Well, we'd anticipate in Elliott wave terms again, and boy, it's really helpful if you just learn some basic Elliott wave, the terms and conditions and rules and guidelines. But what we should anticipate would be what we call an impulsive trend would come off of the November low. Typically, an impulsive trend, it completes its various sections where it breaks down into 5 subdivisions or sections. So let's look at the activity right up through the end of this past week. And what it looks like, as of now at least, a possible 1, 2, 3, 4, and a 5. Made a slight new high in the last couple of weeks above the high back in February. So more than likely it's working out a wave 5. Now, if you've watched these videos over recent months, you'll know that every now and then this wave count changes a little bit. It's always been a bullish wave count, a bullish impulsive wave count, coming off of this low, because this has not changed. But yes, indeed, this has changed now and then. Keep in mind, I'm only looking for trade opportunities, not looking to forecast the future, although that's kind of what trading is, I guess. You look for conditions with a high probability outcome. But one of the reasons I'm looking at this now as a probable 5-wave advance is the weekly momentums have just reached the overbought zone. That means that gold should be very close to completing a top lasting several weeks. Just as back at this top, we had this big outside bear reversal week, and then the market was down for about 4 weeks, and it made its bear reversal from the overbought zone. Well, gold's in that similar position now. It's not necessarily complete. We have some time factors going into next week. That's the week ending April 7th, which would be the higher probability time to complete that top. But the point is that this is probably a very significant low, and we're probably very near a temporary high that will be followed by a sideways to down correction that will last 4 or 5 weeks or so. And that's going to be the opportunity to position long. Several weeks away. So a couple things you should be alert to, that if in the next few days gold should make a new high, is that more than likely it's going to be limited on the upside to around 2036 to 2093. Again, more than likely. And before it completes this weekly high. So the immediate upside should be fairly limited. But once this weekly high is complete, then gold should be sideways to down for several weeks, but that should be a corrective decline. And then the real opportunity would come several weeks from now once we go through the next momentum cycle, weekly momentum cycle, and then have a bull reversal. That should complete a correction to this initial advance. Keep in mind, this is the early stages of what is potentially going to be a multi-year advance, an advance that would last probably, well, let's just say at least 1.5 to 2 years, if not a little bit longer. So that's what we'll be looking for in the weeks ahead. So here's our daily, gold daily data, and that's just coming now. We're ratcheting down. This is off what I had labeled as the wave 4 low in February. Then this section up is also breaking down, looks like it anyway, into 5 waves. So 1, 2, wave 3 into the March 20th high. And then this looks like a correction in here. More than likely, it's making a correction. And that would be a wave 4 correction if it's doing that. The daily momentums are near the oversold zone. Daily low is near. More than likely, gold's going to be sideways to up for several days. But now we know that if gold is sideways up, makes a new high in the next week or so, that should complete that advance going back to the November low. And again, more than likely, at least the upside is going to be limited to around 2052 to 2079 before it completes that multi-week high. So these are the kind of things that we follow up on in our DT report. So if you're interested in trading gold, and you might be interested in short term. I do a lot of short term, 3 to 5 day trades, but we also focus on the big picture and the longer term so you can be prepared for much longer term types of trends. So you might check out our DT reports. We update all these markets 3 days a week. Well, that's it for today, my friends. If you like what you learned, check out our DT reports where we update all these markets 3 times a week. So check out below. There's some links below to get more information about that. And I hope you'll join our DT community and learn to be a very practical, successful trader. Hopefully, we can help you do that. Okay, that's it. Take care. Be back with you in a week or two. Robert Miner, over and out for now.